Yo, what's good, guys? The Lavish Trader here, and today what we're going to go over is understanding top-down analysis. And basically, what top-down analysis is basically going on higher time frames and breaking everything down into lower time frames and seeing the overall clear picture of what the market is doing and what the candlesticks are doing now. I'm not sure how a lot of trading styles are. If everyone um, bases their trading off of top-down analysis, but that's something big for me because I base my trading style is based on top-down analysis. All right, so that's basically what top-down analysis is. Um, I really didn't plan on making this a real long video because top-down analysis is basically just breaking everything down from higher time frames to get an overall clarity of what's really going on inside the market. So this is going to be just like, a basic video, nothing too serious, nothing too hard, but just giving you the overall concept of top-down analysis and what it does. All right, so let's go ahead and get to it. Now, the month we're in March. Today is the 21st of March. So what I normally do is that I go to the highest time frame, which is the monthly time frame. Um, and honestly, I I really look at the first like couple of candles, honestly, because I don't know, because some people who study top-down analysis, they're going all the way back here. Like, why the fuck are you going back here to like fucking 1993? Like, no one gives a fuck about what's happening here in 1993. That's fucking irrelevant. So no one gives a fuck about 1993. So what we do is that we go to the first candle. No, I got some stuff here, got some little notes and whatever. But anyways, right here, this is the candlestick for this month, which is March. Honestly, I watch what the candlestick is doing and how it's forming, and I look at the next, I say like two, maybe three candlesticks behind it. So from what we can look at right here, where price is like more relevant, is that we can see that the market is going into an overall downtrend. Also, my EMA SMA cross. So from here is crossed over the red line. Basically, the red line crosses over the blue line and is going into a downtrend, which gives me confirmation on what the market is doing right now. And the pair that we're looking at right now is USD JPY. So as we can see right here in the monthly time frame, we have mostly what's going on here: a bearish candle, which means it's a downtrend, it's going down. So so we see a lot of bearish moves being made right here, especially seeing this big engulfing pattern right here would give me clear confirmation that the market is mostly going bullish right now. And I mean, sorry, bearish right now. And that's what type of market that is overall in. But I never go based off of um, the first candle until the end of the month, because when it starts reaching the end of the month, like we're pretty much like in the middle, coming to the end of the month. But when it's more at the end of the month, that's when it's more relevant, because that candle is going to form all the way out. So since it's still kind of the middle of the month, I wouldn't too much focus on this candle, and I'll look at the other ones. So now we can go from the monthly to the weekly. Now, which with every candle that you see, this is 1 week, this is 2 week, this is 3 week, this is fourth week, fifth week, sixth week, etc., etc. So these candles are based off of 7 days, which there are 7 days in a week, and you should have learned that in school. So when you break everything down to different time frames, you start to see different patterns. You start to see different candlesticks, because you're seeing basically you're seeing the formation from the higher time frames, and you're seeing it on the lower one. and a lot of and a lot of the time they'll it's the same thing, but it's going to be shown differently because you're going to see bearish and also you're going to see bullish moves being made. All right. So for this week right here, for the week that we're on, what's today? Today's Wednesday. We see it's starting to form an overall uptrend. All right. Last week it was mostly a bearish market, but the week before it was bullish. But from what we can tell, if you see more red candles than blue candles, that gives you a lot of reason why we're still in a bearish market, which is a seller's market. So that gives us a lot of reason why we're still in this market. And also here, the red crosses over the blue, which also gives us confirmation that is in what? A seller's market still. Okay. So now we go from the weekly to daily. This is what's happening every day, day by day by day by day. Oh yeah, and don't worry about these right here. My exhaustion and supply and demand zones. Don't worry about this. I'll probably go over these in the next video, but don't worry about these right now. But anywho, all of these are showing what's going on day by day by day by day by day. Okay, so this is this is basically what's going on every single fucking day. Um, and as you can see, we're still in what? A seller's market. Still bearish. Still nothing but bearish moves. So honestly, all of this that I'm showing you guys is all fucking, it's common sense really. It's really just a lot of common sense. Then I go to the four hour chart, which is what I base a lot of my trades off of. The four hour, for swing trades, intraday, etc., etc. Scalping, I go off of lower time frames like the hour and lower. Yeah, so the 4 hour time frame, you're going to see a lot more noise because you can see what you could basically see more of what the market is doing. So the higher time frames that you go, the more denser the market is. And as you go down to lower time frames, the more noise and more movement that you're going to be seeing from the market, because really all it is it's breaking it down. That's it. It's breaking down everything. But on denser um, time frame, you can see a lot of what's going on. But my main time frame that I base a lot of my trades off of is the 4 hour time frame. So this is the time frame right here that I'm mainly watching, like right here. Okay, that's just me. That's just a part of my trading style. Okay, anyways, then you go down. I don't mess with 3 hour, don't mess with 2 hour. Go down to what? 1 hour. 1 hour, you're gonna see a whole lot more noise than the 4 hour, and it's basically showing everything that's being formed. That's all that's doing, is just showing everything that's being formed as of right now. Okay. So from 1 hour, I go to, don't mess with the 45 minutes. I go straight to the 30 minutes, and as you look at the 30 minutes, you see a whole lot of noise. You see a lot more movement. Okay. So normally when I get down to like the 30 minute, 15 minute, 5 minute, that's when I'm really looking for entries, because I'm basing everything off of the movements from the 4 hour chart. So I go from 30, go down to 15, 15 around this range, you can see a lot of consolidation. So always remember, remember where you're at in the market. Is very important to like remember where you're at in the market. Okay. So just remember where you're at in the market. Always mark off where you are in the higher time frames. So when you come to the lower time frames, you can look at it and you could basically break everything down. So when I'm in my 15 minutes and I'm in my 5 minute time frames, which are like the lower time frames that I go to now, I'm just like trying to find entries now. Now I can see what the market is doing. I can see the candlesticks that's being formed. I can see what type of moves are being made. So I really just take my entries here. I don't go any lower than the 5 minute time zone because the 5 minute is good enough. I mean, of course you could trade in the one minute, but the 1 minute you see a lot of fucking noise. Like you see a whole lot of gang shit going on. You feel me? So like you see a whole lot of shit going on. So I don't touch the 1 minute chart. It's too much noise. It's like way too much. Just way too much for me. So the lowest time frames that I recommend for anyone, stick to between the 5 minute and the 15 minute. I don't go lower than 5 or 15. Me, I normally take trades on my 15 minute time frames. So yeah, that's basically top down analysis, going from higher time frames to lower time frames and breaking everything down and just getting an overall clarity of the market and seeing what the market is doing. All right, this is the Lavish Trader. Didn't want to make this video too long. I really hope that you guys enjoyed the video. And what I'm using is TradingView. If you haven't heard of TradingView, I have another video of it. So if this video brought any value to you, if you learned anything from the video, please, please, please like, comment, and subscribe to continue to receive my videos. I'll be making videos every week or every other week. I'm trying to be more consistent, because like every day I'm trying to educate myself more and more on trading Forex. And the more that I learn, the more that you guys learn. All right. So this is my beginner trading Forex trading series. And this is understanding top-down analysis and trading Forex. Really hope you guys enjoyed the video. All right. I'll see you guys next time.